Today is FOMC day. We're going to get some big news today in the market. Marathon closed down on that head and shoulders I pointed out in yesterday's short. We've got the Bitcoin monthly return averages, stock market trends in an election year, and I've got one special stock to talk about with you later at the end of the video, so stick around for that one as well. It's already paying out for me. So let's talk about miners. They're down today. They're down in pre-market. I did a short about that real early this morning when I first woke up. As you can see, Marathon is down 4.2%, Bitfarm 3.25%, CleanSpark 3.8%, BTBT 3.5%. Cypher down 3.25% as well, and Hut down 4, almost 5%. I called out this head and shoulders right here, shoulder, head, shoulder, with a neckline right there yesterday on the shorts. If anyone caught that, great, good job on that. We did a big gap down through the neckline this morning, and I expect us to maybe even fill this gap down here at 1637, perhaps. Let me just put a line there. That's a very small line. No, where'd they go? There it is. Let me put that up there. All right. This is where I'm expecting it to probably go down to this 16, maybe fill this gap. It might not fill that gap, but it's a pretty obvious target for this head and shoulders here. Technically, this head and shoulders could end right where it is, maybe around 1710, and go no further, and it will have completed its pattern. But I saw this yesterday. I made no moves on Marathon. I waited for today, and this morning I'll probably do some purchasing on that because I am not exactly sure where the bottom is, and this could be it. I'm not sure. I don't know. That's all I've got to say about that. Let's take a look at where Bitfarms went this morning. Then it too had a similar bit of a head and shoulders pattern here. Broke out of that upward channel. We're now solidly back in this descending channel. We're getting towards the center of it here, which coincides with the 50 SMA down here about 218. We're bouncing back real hard off that move down. Today we were 231 yesterday. We opened up today at 221. We are forming that handle for that cup on Bitfarms. What about on Marathon? We are also, it's a much uglier handle, but we are forming that handle. And if you look here on Marathon, we went below the midpoint on this downward channel that I drew for the handle. We're getting close to the bottom of it. The bottom of this channel will be 1690. If we follow it down for a day or two, we may find ourselves at this red line here filling this gap. So watch out for that gap fill. We don't need to fill every gap on the chart, but stocks tend to like to fill those gaps when they are present. Take a look at CleanSpark, same sort of story going on here. We're in that downward descending channel. We are forming that handle on that cup. Keep an eye for that out for that, because when this reverses, it's going to be quite dramatic. Maybe even taking us back up into $10, $11 on CleanSpark and in the mid-20s on Marathon. So keep an eye on that. CleanSpark, I mean, we're all recovering very, very quickly this morning. The miners did not like being down that low. Bit Digital, same sort of story. We're creating our handle. We got into my little buy zone down here, this little shaded zone down here beneath 278. We opened up at 271 this morning, and we're moving our way up pretty aggressively with that. Hut is actually lagging behind. I'm not sure what's going on with Hut, what has gotten all the wind out of its sails, but Hut is lagging behind the other miners. Cypher is actually doing better than the others now as we move up. Bitcoin's down a little bit, not by much. But that's the miners today. Let's take a look at Bitcoin seasonality. So January is done. 1 month. We actually did a positive 1.29% for the whole month of January. And that was because we did this huge down, almost 7%, and then we came back up from that for the month of January. It's the last day of January. We still technically have 1 day, so we can't say this is the whole month of January yet. But, so far for the month of January with 1 day remaining, 1.29%, which isn't terrible, but let's look at the average here. So this is the averages. I got this information from coinmonthlyreturn.com here, and they don't give me average per month, did they? Wait, they did. Aha. What happened? This must not have loaded properly before, so I put it in Excel. Great, I didn't need an Excel. Fantastic, I like it. So for January, the average return is actually 9.7%, so we're doing pretty badly on that so far. For February, the average return is 12%, with a few uh, faltering years, and each of those faltering years was a halving year. So keep that in mind. 2012 was a halving, 14 was a halving, 2020 was a halving. The one that did great was 2016. That was a halving, and that did really great. So that's the outlier here. Anyways, and then we've got March at 9%, which is what, if you look here, mostly negative, with a few big bangers like in 2013, which is after the halving, or 2021, which was after a halving. This year is a halving year, and in halving years, we had minus 22. Right, no, first was in 12, then 16. All right, sorry. We had 0, minus 4, and minus 24% in a halving year. April tends to be great with 33% return. So if we see a big return in April, don't be super surprised. May 17% is the average. How do we usually do in a halving year? 40%, 40%, 4%. Yep. 2016, 17%, 2020, 9%. Okay, so not so bad. In the halving years, though, if we look at the end of the year, that's where we see some pretty decent returns here. Like in November 2012, we got 12%. Of course, 13 the year after was amazing. Let's see, 2016 we had 6, but then the year after was amazing with 54. Some people are theorizing that the inclusion of institutional trading in this halving cycle will make all of these big numbers happen a year early. We'll see if that comes to pass, but if not, we can still expect a pretty significant return on the year. If we go back here, for the year total, 119% from 2012's halving, 2016 that halving year, 100% return that year, 2020 174% return that year. So we'll probably see something like 100% return this year, possibly, maybe. It is only January. There's a lot left to see here. So in the in the stock market trends, we've got presidential year trends. So this is the S&P 500 composite all election years since 1950, and this is 2024. You can see the seasonality. We actually kind of went somewhat with it, but to a much more dramatic move. We came down, came way up in January. Usually January ticks up a little bit, and then in February it kind of looks mostly flat before it falls into March, before building back up in April. Slight lag in the early summer months, and then the back half of the year is just gangbusters. So keep an eye out for that. February to be a bit weak, March going into April being exceptionally weak, and then for the rest of the year kind of going up with a slight lag in the early months of the summer. Now, that is just some seasonality quirks. That is not necessarily a perfect roadmap for you to follow, but for something to be aware of so you're not surprised. Like, say it's mid-March and your portfolio is way down. Well, that might just be seasonality. Don't be super surprised or concerned about that unless there is some sort of big black swan reason why that is occurring. But let's take a look here. So if you know this guy here, this is Tom Lee. He called all of 2023. He's gotten a lot of fame and attention due to his analysis last year, and that doesn't make him any sort of sage or always know what's going to happen, but he does have some interesting insight as well as some opinions as to what's going to happen. So I'm just going to play that real quick.
I think it's possible that we make a minor new high before the end of the month, and then we might have something like a 7% drawdown.
Since then, the Dow...
All right, that's all. He elaborates on that. You can watch it if you want, but that's that. He's saying that we are seeing some lofty high drawdown here going into February, basically. Okay, the Fed is today, 2:30 p.m. Eastern Time. The Fed will address the press, and we will see some wild moves in the stock market. If you get a bunch of notifications on your phone at that time, do not be alarmed. It is simply Jerome Powell shaking things up a bit. It should even out after he is done talking. If you trade this, good luck. It is very volatile, very profitable, but also very risky. So keep that in mind that around 2:30 p.m. your portfolio might be by, going crazy for, about half an hour or so before it levels off. Now for the stock of the day, LMT. So this is actually something I got into yesterday right before close. I'm a little bit up on it. And the reason I got into it is because of this little note I took down here. I got a red dot, which is the 15 crossing over or beneath the 50, while also in a VIX fix bottom finder. So when this is lime green, it's indicating that a bottom is likely near. So this red dot appeared while the VIX fix was indicating a bottom potentially, and the RSI is oversold, severely oversold, as we noticed here. It just came out of a squeeze, which is also a little bit exciting. I don't have that in the notes, but it's a little bit exciting because all that pressure is relieved. So that downward pressure is gone, the big pressure. And about a 3-month call on this one with the expectation that we'll get back up into this pocket here, which is one of the most traded zones, since October, where a lot of resistance is. And if I turn on, I don't have the volume profile, but if I turn on the volume profile, you'd see it's pretty empty between 431 and 440. So there's a very good chance that this oversold and this bottom finder along with this red dot shows a bit of a reversal from here going up to about 440. That's what I'm expecting. I'm expecting it to get up to 440 maybe in the next week or two, maybe 3. I don't know if it'll happen today because it's FOMC day, but that's what I am looking at, what I'm thinking about, and I'll draw my little channel here because I like channels. Let's see here, actually, this should look more like that, like that. All right, that's what I'm anticipating on this one. I'll bring this back to you. This is Lockheed Martin. It moves when there are conflicts in the world. It is it is a military stock basically. There's a lot of conflict, so it's been moving around a lot lately. Honestly, ever since the invasion of Ukraine, this has been moving a lot. So that's what I'm looking at with this one right now. I've got some indicators that have signaled to me that this may be a bottom pivot point, and I have technically front run it a little bit. I should have waited for it to close out above that, but I have a tight stop on it. So if I lose a little bit of money, I won't be too concerned, but the potential of making a lot of money really fast is also there. Again, this is not a suggestion to buy, sell, or hold any stocks or assets whatsoever. It's simply what I'm doing and what I'm seeing when I look at these charts and the actions that I am personally taking based on the analysis of those charts. And with that said, please like, comment, and subscribe, and have a wonderful day.